Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ARES Capital Corp. Quarterly Report. ARES Capital Corporation provides a wide range of financial services to middle-market companies, including acquisition financing, recapitalization, mezzanine debt restructuring and rescue financing, leveraged buyout transactions, growth capital investments, general refinancing debt investments, revolvers, first lien loans, second lien loans, etc., equity investments, non-control preferred and common equity, junior capital, subordinated debt, private high-yield investments. The company focuses on investing in companies across various sectors, including manufacturing, business services, consumer products, healthcare, information technology, restaurants, retail, oil and gas, and technology. The ARES Capital Corporation, ARCC, stock price experienced a decline of approximately 6% to 7% over the last 12 months. Several key events influenced its performance, including earnings reports showing stable financial results and growth in net asset value, significant net realized gains from equity co-investments, a recovery in transaction activity, consistent quarterly dividend, payout, strategic debt offerings to enhance liquidity and strengthen the balance sheet, leadership change with the appointment of a new CEO. These events collectively contributed to the observed stock price movement, rather than a period of insignificant change. The primary drivers of revenue growth and decline can be summarized into several key areas. Revenue growth is primarily driven by high-growth investments such as Softec, Inc. and Cortec, LLC, interest income from loans and securities, investment gains from the sale of securities, fees from investment management services. On the other hand, revenue decline is largely attributed to net realized losses on investments and foreign currency, decrease in interest income due to a decrease in funded revolving and delayed draw loan commitments, a decline in fees from investment management services. Overall, revenue growth is driven by high-growth investments and strong performance of certain assets, while revenue decline is largely attributed to net losses and decreased interest income. The company's financial performance indicates a concerning trend. Despite its efforts, the company has been unable to generate positive operating cash flow in recent years, with both 2025 and 2024 showing negative results. This suggests that the company is struggling to manage its expenses and maintain profitability, posing significant challenges for future growth and sustainability. The company's debt level and interest expenses have undergone significant fluctuations. Initially, the total debt decreased by 25% from $20,878 to $15,615 between two unspecified periods. However, a later report indicates an increase of $2,973 million, 11.3%, in debt level from December 31, 2024 to September 30, 2025. This contradictory information suggests that the company's debt level has not remained stable. Regarding interest expenses, there is conflicting data. On one hand, a 27% decrease was reported for 2025 compared to 2024. On the other hand, an increase in stated interest expense from $184 million to $194 million, 3 months, and from $491 million to $541 million, 9 months, was also noted. The lack of explicit information on interest expenses changes makes it challenging to draw a definitive conclusion. Regional performance review. The recent financial summary reveals a mixed performance across various segments and regions. Notably, commercial and professional services saw a significant increase of 2% in market share, reaching 11.4%. The Midwest region also experienced growth, with its market share rising by 1.9% to 22.8%. On the other hand, software and services witnessed a decline of 1.3%, dropping to 23.2% of the market. The West and Southeast regions suffered similar setbacks, with their market shares decreasing by 3.3% and 1%, respectively. These results indicate that while some segments and regions are thriving, others require attention to improve performance. Management is optimistic about the company's outlook, citing strong net operating income and revenue growth driven by investment income and management fees. They remain focused on delivering long-term value to investors. However, they also acknowledge potential risks and uncertainties, including global economic volatility, uncertainty around the financial stability of the United States, and regulatory challenges that may incur significant costs and expenses. The company has made significant transactions in the form of acquisitions and divestitures. Key acquisitions include Allied Capital Corporation in April 2010 and Ivy Hill Asset Management, LP, which is a wholly owned portfolio company. Additionally, the company received $735 million in new investment commitments between October 1, 2025 and October 23, 2025. On the other hand, the company has also made notable divestitures, exiting approximately $1.1 billion of investment commitments within the same period as the acquisitions. Furthermore, a sales figure of -$687 indicates that the company has engaged in significant divestiture activities. The company has a history of paying dividends to its shareholders. According to the financial summary, this practice is well documented in sections 566, 614, and 660 of the report. The payment of dividends indicates that the company prioritizes returning value to its investors while also generating revenue through share ownership. That concludes the financial summary for ARES Capital CORP. Feel free to comment below, and I will be happy to answer them when possible.